welcome everybody to the Monday Hangout. Obviously, we're talking about the pre-market here in what was a very eventful last week and a massively eventful Options Friday. Remember, anybody, if you're trading the third week of any month, watch out for those options expirations because we saw it come all the way back up to that 390 as per, I guess, what we were talking about on the Twitters. If you saw, posted that 390 here for a reason. Unfortunately, there were a lot of puts and the market managed to do this and pull it back into that zone. So let's talk this morning about what's going on here in markets at this stage. Obviously, you can see a big disparity here in markets between the Russell 1000 value, 2000 value, S&P 500, 2000 in general. Obviously, the hyper stocks really getting hurt here, growth, etc., etc. So it's been a year of growth getting punished. Is this the week where we see some turnarounds and growth starts to come back a little bit? That will be determined soon, I think. And yeah, it's this type of rotation that we want to understand in markets. So let's have a look now at the lead kind of things leading into today's market. And we'll start off here with the S&P 500, what we know so far about it. So what we know so far is that the Friday went underneath. That is, it probably swept liquidity, effectively taking out stop losses from this previous low, taking out all sorts of areas, freaking people out and sending them into a total spiral of everything's doomed and it's all going to explode. To me, it kind of looks like the market has shown its hand to a degree and it said, you know what? Yes, we went down. Yes, we hit key levels, but we also might have just shown that first level of demand coming back through the market. So if we grab a fib retracement from this zone, of course, that was a 38.2 hit. So it hit that 38.2 level to the T. We talked about it for some time, and it's rallied off that area, creating that big demand wick behind. So if we now scroll in, what you'll notice is that both the Thursday and Friday kind of highs are similar. They sit around this 39.46. 39.46, 39.50 will be an interesting zone for today's traders. What it's probably going to signify is a breakout at that point, followed by some form of pullback, followed by obviously, hopefully what we see, which is a rally back up to that 48 area. For anyone that's wondering where the key levels are this week, it's going to be these levels. So we have this 40-80 kind of zone as being a key level of supply or resistance up here. Don't need to worry about that one anymore. And we've got that 39.46 daily high. Remember, daily highs mean a lot of things. We've got ATX Myers coming in with $4.50 donation. Good afternoon. Could you please have a look at on the QCoin exchange, please? We'll have a look at that. Is that like the card game? Thanks. Thank you very much, ATX. Appreciate it. We'll check that out in just a few moments. I'll leave that there. So, yeah. Big movement here. Obviously, this sweep is super important. Another thing that you want to look for when you're talking about bottoms in markets is things outside of Bollingers. That can be a very good indication of pure capitulation. Over here, we saw really extreme outside of Bollinger movement. Over here, it moved out. It wasn't extreme. Over here, a little bit more extreme. Generally, huge selling gets whipped back up to normalize the market. That is, normalize it back to the mean reversions. What a lot of people like to do, they like to trade it back to the Bollinger, the 20 moving average. The disparity here is that the red line is the 20 exponential on my chart, but the mean reversion is very, very popular style of trade out there and for relevant reasons. So we look at this and we say, okay, did the market go to an extreme zone? Arguably, yes. Was that a 38.2? Yes. Did it enter a technical bear market? It did, but didn't close in a technical bear market. It rallied back through. So we've got a big resistance. We've got decent volume that came through on the session, showing us that there was a lot of transactions going on. And when we go and we scroll into the ES minis in just a few seconds, so we'll go over here to the E minis, and you'll notice if we scroll into the 5 minute or even the 1 minute, what happened was we saw a significant change of trend on the small time frames down in this area. Effectively, we were making, I think the one's probably the best thing to show this. I was going through this before with a few people. So basically down here on the Friday, if you were trading, it was down, 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 then something changed. It broke that level of previous resistance. That changed the trend. And effectively, we then moved into looking for buying opportunities throughout this. And of course, once we snapped that off, if you weren't already realizing why potentially down here was a high risk reward, like a high quality reward to risk trade, once that occurred, it moved on up. And there was that big rally in the last couple of hours, last hour and a half of the session. So very, very key point right there. And it does pay if you're a day trader to really wait for the change of trend. You know, one thing that people don't do is they just say, I'm going to buy the dip. Yeah. Well, that's great, but why are you buying the dip? Are there relevant reasons? Is it a dollar cost average? Is it based on some other reason that's out there? You've got to really think about that. So here, coming into today's session, we think about like an hour and we reset that and we go, okay, well, where's the hour change of trend occurring? Well, we've got the new low. We've obviously seen this level become a very key pivotal resistance or supply level, and it's kind of doing battle with that early here in the session. We've got a gap that's going to fill, you would hope, through this range. We could certainly see it come back down. What if it did something like this? Or what if it spiked, pulled back? Would there be a lot of buyers around in this area? I think there'd be some buyers around here if that happened. You break to a new high, showing that you're consistent, you're going, changing the direction of trend. Possible pullback here to around that 38.80 area, and then possible rally back up. That would be a fairly substantial idea. Change the trend, get through this resistance. We saw the daily, why it's such a key pivotal area, and then we can move back up to that 40.80. So I think that's a strategy that some people may want to employ or may want to think about in their market kind of preparation for today. Where are our key resistances? Where are our key supports? What have we seen in the market futures so far? Generally, it's been bullish, but it's turning around here, and we know things are going to get wild and woolly coming into the Monday open here. A lot of strange things occur, but I would like to see this daily high get taken out on the SPX, the real market. And if it does, I think that bodes fairly well, especially if it can hold it throughout the session, or if it holds it, goes down and then closed above. That's a tick for me. That'd be very, very nice. So ATX, you asked a question. Let's go over to that question right now, and then we'll come back and have a look at the Qs as well. And we'll look at some of the lead indicators that we always go through. Hope everyone's enjoying the session so far. Make sure to give it a thumbs up if you can. It does help us out. So this is, what is it? UNO. I've never actually even looked at this before. UNO on the Q coin. I assume that's it. Q coin. Okay. Oh, well, there's not much we can really say about this one. Let's scroll down. Basically, it's on a new low over since when it came out. You know how I feel about anything that's new. It doesn't really trade technically. It's more about news than anything else. So on this low here, we can't really get too much information. It looks like it's done the first stage of a possible recovery on the daily. You've got the trough, you've got the peak, you've got the higher trough and the higher peak. So maybe there, you don't really know it's out of the woods until it gets back above this previous level of support. And I could see shorters coming in here and here in the future, but it looks like it's rallying at this stage. There's a good chance that it tries to rally at least back into that previous support or demand becoming supply area. So I think in here, you're going to have some problems in the future. There's a good chance that the market will get back to around that 0.15. And at that point, maybe a decision will need to be made. But yeah, at this stage, I mean, it's recovering as best it can, isn't it? It's trying its best. Not much technical analysis you can do on this chart, though, unfortunately. All right, let's go back through some of these other ones. And I'll just get rid of that for a second here. Let's move over. DXY. As we suspected as a community, dollar index definitely weakening off here. Now, we made the call that this was probably occurring really around up here. We started to suspect it. We obviously suspected it very heavily once it happened here. That became, okay, cool. Yep, we're definitely going down, or it looks very, very likely from a technical standpoint. And now we've just made and we've taken out this level over here. So fairly significant movements here on cash. And I think this is just the example of what a lot of people do wrong. They follow this general idea. Suddenly, everyone was talking about currency, I noticed over here. when everyone talks about something or everyone believes something, it's usually not a good idea. Remember that elevator theory or the shoe shiner theory or whatever else, taxi theory or whatever you want to call it. When everyone's saying something's good, it usually isn't that great. So cash is king was the motto of the last couple of weeks, probably the last couple of months. And yes, cash is generally good in defensive markets. But if this is to be believed, what could this signify? Well, maybe some money's coming out of cash, out of safe havens, and moving into bonds. Think about things logically, guys. If we have a market, let's say we had large participants, such as 401ks in the US, super funds, as we know them here in Australia, retirement pension funds, whatever you want to call them. We have just generally managed funds. We have, of course, investors in general, mandated, LICs, all of these types of things. What do they have to do? Well, they have to be invested. What kinds of investments do they have? Stocks, bonds, and cash. Now, do they tend to stay in cash very long? Well, you've got to think about it from their perspective. If they have a fund and they say, oh, we're holding 30% cash, most of the time, what's somebody that's investing going to be looking at? I can hold 30% cash. What are they even doing? Useless. Useless, guys. And they usually can't even go that much into cash. So they are mandated to hold either stocks or bonds. So during defensive times in the market, what do? They go defensive on stock sectors. They pick up the sectors that are more defensive. They may or may not go to bonds. And this time, what do we have? We have US 10-year going up at one point there. So the US 10-year going up, well, they're not going to want to hold bonds. So they come back into cash for a while. And this movement here could signify, and I think it does signify, a movement back into, at least for now, bonds and possibly the market, hopefully. So let's look at the DXY and the next moves here that we suspect. Kevin Finnan says, if I had 1 billion to invest, I wouldn't be in bonds. Bonds are good during certain times. You've got to look at the bonds charts and look at where they are in comparison and understand that, yes, during certain periods, bonds are not good. Certain periods, they are good. But do not discount bonds. They can be good at certain areas here. So here we have the last trough. We obviously knew this was what we call a defended line. That defended line got taken out. Rally ensued. We were kind of hoping it would rally a little bit more. It was kind of weak rally, really. Then it dumped again. Okay, whatever. Pulled up, dumped. Now it's broken underneath. So I probably suspect that the dollar index should rally a bit. That is, it should come back, possibly test this area around here, around that 103 kind of zone seems quite probable. And then we might see a little bit of decline back on it. Because what this is looking like is it looks like a little bit of distribution. Obviously to be determined, but 103, pretty interesting zone here for the DXY, and conversely Euro odd, US dollar pairs in general, anything to do with US dollar, pound, US dollar, etc. US 10-year, slight rise here, looking for a new low. If we get a new low, of course, that's going to be good for things like TLT that we spoke about a few weeks ago. That's Treasury yield versus Treasury bonds. And they've been doing quite nicely the last 2 weeks, up about 5%. And then the other thing that we've been mentioning is gold. And I feel like gold hit our first target here. So gold's basically hit that 1855, 1853 zone we spoke about. Fantastic. Tick, tick, tick. Wouldn't mind for it to come down a little bit now, maybe come back into this area here. Again, in line with the DXY. It's going to move a little bit like this. But gold has done some super interesting stuff here. And we spoke about it down in this demand area. Obviously, I went bullish on it, the concept here, and I've been talking about it a lot. And that's because it's smashed through a downward trend. So it's realistically said, okay, you know what? Everyone else is trying to short gold. We've closed to the long side here, and we're looking for potential up to the next area. The next area for me was around this zone. That's been hit. Gold might pull back, but in general, looking more bullish than bearish here on this chart. Certainly coming through. So much better there for gold. Another interesting sign. US oil hovering around that 111. Don't know what to say about this as a lead or anything. It's just kind of, to me, I think oil is weak. I think demand is probably slowing on oil, but I can't show that. other than just to say the charts don't interest me right now. I mean, we're at resistance. We saw that over here. Do we now move back down? Has the spread of oil become super, everybody talks about it, everybody thinks it's great? It's maybe not as good. Natural gas was another one that I'm pretty negative on. Obviously, it's in my zone of shorty areas. We've got a pretty big support here coming into the session today. Will it breach through that and then continue its weakness? Certainly showing the signs. It's in the right zone, 61.8, 78.6 area. That's what I'm targeting. It's interesting one. What do you guys think about natural gas? A lot of you probably have no opinion, but do you think this thing's short or do you think it's long? Boo Lemelin says it's a transitory dip. That's right, exactly. It's a transitory dip. RJ, I do one live video on Mondays, but if you're interested in the other live videos, we do them as part of the private community. You can always join a 7-day free trial. Click on the link in the description down below, and you can join that up if you'd like to come and give it a shot. But the YouTube algorithm is evil to live streams. Believe me when I say that. By the way, guys, we've almost got 1,000 here. Please do give us a like for providing the content if you enjoy it. And if you haven't subscribed, consider doing so. It does. We do a lot of market updates, and we really think about these types of things, hopefully in a way that interests and makes you kind of realize, oh, there's different ways to consider this other than just fear and greed. Because most people, they just kind of go all in on the concept. We're really greedy right now. Euphoria. Let's go long, which is really what 2020 and 21 was all about. And now everyone's just fear mongering everything, which, I'm not going to say I don't put a thing saying, is the market going to crash next and stuff? But I do try to bring an objective look to this because the inner workings of the market are super interesting. So let's go back over to the major indices, because really in times of very high fear or greed, specifically fear, we want to be looking at the indices more than we actually want to be looking at specific stocks. Let's say you like Apple. Great. Looking at the Apple chart all day isn't going to help you that much. What's probably going to help you is looking at the SPY, looking at the Nasdaq, and understanding what they're doing. If the Nasdaq gets crunched under a zone, Apple's probably going to get crunched with it, or Microsoft, or Google, or whatever. So really it becomes, look at the indices, and if you like one of those stocks and you think the indices are hitting a support, possibly that's the stock for you. But to focus, and this is just a hint, to focus in on stocks, you're going to get slaughtered a lot. And if you've wondered why, damn, I keep losing, or damn, I don't make these good decisions, it's because in times of VIX plus 20, I've said this before, do not swing trade so much, be nimble and be fast. Times that are high in VIX, that is fear, are better to drive into the market indices, and you're also better to specifically start to think about your dollar cost averaging strategies or whatever else you might have for your investments, and being nimble and fast in the markets, because things change like this, guys, like that, really fast. So let's go over to this NASDAQ. We've got this downward trend that's been intact for a while. We obviously know where our next level of supply resistance is, the area that it shorted off last time. We've made a max pain potentially down here, and we have a high that's formed. Now, if we go to the NASDAQ NDX or QQQ, this little area here we know is pivotal. So it's around that 12,060 zone. Rejection, big dump, rally. We rally through. You'd think the next level is trying to be that 12,500. So such a pivotal zone here. Where are we right now? 11,896. So it's a little bit weaker than the SPY, but just like the SPY, this level is all important. Those previous highs, because what are they? They're previous daily highs. That's what we want to get above. Where is the problem area? Well, that downward trend that continues to come down here. What's behind that? Notice the 20 moving average. Where's the Bollinger? Well, it's going to be outside of the Bollinger. So if we expect pickups, at least initially, that's where the pickup levels is. Then we might see weakness. Then we could see strength. Now, why am I saying strength might be in here? For Elliott Wave people, you'll be all going, yeah, I'm an Elliott Wave. I'm loving it. Now, you might say, okay, there's 1 move, 2 moves, 3 moves, 4 moves, 5 moves. Now, usually you get an A, B, C after that, and it's technically been waving down. I'm not the expert of Elliott Wave. I don't use it or profess to like it that much, but I just wanted to understand this for you. So there's 1 move, 2 move, 3 move, 4 move, 5 move, yeah? Bottoms off, 1 or A, B, C. Okay, so generally there should be a 3 move here, and hopefully that 3 move is big enough to get us back to like a 13,500. Now, why I say that zone? Remember, it's more about what's the market been doing recently. Well, the market came back up to here, so that distance should check out. It checks out pretty damn well. Why do I say that? Because the movement from top to bottom is very similar. So there's the movement from top to bottom, the movement from top to bottom. You see how it kind of checks out? And I look at this and I say, oh, technically it's making some sense. This should be around the area. And many of you are joining us for the first time. Thank you very much. You're joining us because hopefully you like this kind of way of thinking about things. It's just bringing different models together and then saying, okay, objectively, does it make sense? And the big one that I can't get past, and this is the first time in my trading, I started in 08, 09, back then, a little while ago. One thing I can't get past in these markets is something that I've never seen before, ever. 1, 2, 3, 4, 5, 6, 7. Backwards. So 7 weeks in a row down. Whew, that's rare. That is rare. 2001 was the last time that happened. For anyone that didn't watch the video, you're joining us for the first time. If you didn't watch the weekend video, here's the stats. 53, 1970, 1980, 2001. Yes, there was a week down that went 8 in 2 of these. Okay, so we're on week, we're in that last week here. Could there be a capitulation like the other falls? That is a monster sell-off followed by a mega rally. Could we get a 9? Anything's possible, but statistically unlikely. So the markets are super sold off. Most indicators, you load them up, you put an indicator on your screen, and you're all going to say, oh, I'm looking at my RSI. My RSI is oversold. See, I told you it was going to go up. Well, of course it's going to be oversold. What do we expect? It's always going to be oversold when you sell off that many weeks in a row. It's always going to be in these levels of extreme action. Now, it's not going to be super extreme like it was over here because that's a super fear sell-off. This isn't really a fear sell-off, which is usual for when trades turn around. Usually you get a super fear kind of event. And then we turn. But I do feel like that was a very pivotal Friday. What do you guys think about the Friday? Do you think that was sneaky Wall Street showing their hand to us, saying, hey, we inflict max pain on you guys? That's what we want to do. Bobby Chang says, so after 6 months, most of it retraces. Not so much. I don't know what you mean by 6 months. All right. People have got their votes coming in. People are grouchy. They're saying the Wall Street Warriors. Sunil says, this is a huge bounce coming now, boys. All right. That's not from me. It's from Sunil. Okay. Yes, I was expecting rally at the ends. Oh, nice. Wonder if you traded that. And Ali A says, one more dump than we rally. Yeah, well, this is the question, isn't it? We know we're pretty damn close, just statistically. Do they want to shake one more time? I can't tell you that. No one can at this stage. It's going to be difficult. I don't think so. It seems probable that was the low. Enough people are probably questioning it. I would like to see that high taken out. And for a lot of people, they want to see this high taken out before they even want to dabble. But, day traders, you're looking at your key levels and you kind of say, okay, this is a key level. Obviously, there was bottoming effects on the smaller time frames. This could be max pain. So they're looking at this being a big zone for the day and for the week ahead, of course. Maybe one more rally, then dump till fall. Yeah, so a lot of stats will kind of go with it. Now, I haven't been reading or even watching too much out there, but I assume most people doing this, most people going with this idea. I like it when most people disagree. More people that disagree, the better it is. Door Slayer says Nasdaq will not go over 12.5. So 12.5 is here. That's obviously a very key point. So I agree with you that these are big zones. For the week ahead, we've got that big area. We know that's look, the 20 moving average is there. I mean, am I going to deny that the 20 moving average has been hit multiple times and respected over here as well? If you breach it, big deal though. You're going to now let's see what you say here, Dor. Do you disagree that if we breach it, all of a sudden we start to open the doors to 13.5? Not good when you laugh at your own jokes, yeah. 13.5 is possible, I think, if you breach the 20. But I agree. Very pivotal, huge area here, big fight. I think the community knows what's up. The community knows. So we've got the big piv up here. This area I'd like to see broken through to show us that the market has intentions of actually rallying up. You can see this morning, 39.37. A few of you guys want different stocks. We will look at the stocks. We've got half an hour to go here till they open. And Gregory Rulo says, Tom, give us your take on Amazon's split trade. Typically, Wall Street runs the stock 10% pre-split and 10% further after split. You are correct. Generally splits, because we've got a few stocks that split. We've got Shop, Amazon, and Google that I can think of off my head. I'm sure there's others. So because we have those, they do tend to have nice runs in them. Now, they've been overshadowed by, frankly, horror show types of stuff. And as we know, one of the lead indicators I use, XLY, XLP, this shows me risk on, risk off in the markets. I usually don't give this away, but I'll bring it in here. It's kind of showing me, still the market's a little bit trashed, but we are at a key point of the ratio, okay? So if it's going to find itself, and right now it's coming in negative, then, it really needs to do so right now for something like Amazon. So we look at Amazon. Look, I find it hard to not see this price and say, for investors, they might look at this and say, you know what? I like Amazon here. I know split, all this other stuff is coming. This is a pretty cool zone. I don't disagree with you. Obviously, potential here is still lower, back into these kind of areas, or even the lows here of 18 and 19. But yeah, it's right at that role reversal. It's knocked off a lot. Google is similar. Google's almost came down to my perfect little demand area down here. I was looking at this 2050. So a lot of people are saying, oh, there's still more dump. Well, some of these stocks kind of say, yeah, that's possible. Because you look at a Google and you think, why would it stop here? Maybe that resistance held it, becomes support, and that's where it buys. Possible. Let's have a look at Apple. Well, Apple kind of just stopped in the middle too. It just stopped at this resistance, becomes support, and that's where it is. It still has a little bit to go if it goes to the demand area later. So yeah, a lot of it revised, I think, this week on getting back above these zones, putting in the work here to get above these daily closes. To me, or these daily highs, to me, that's a big deal in these markets. So the split trade is technically a good trade. Usually it does hold the stock higher. That is, it does run through. But you've got to remember, when the split was announced, geez, I don't remember. It was here, wasn't it? So when was that? It was 2nd of Feb. It isn't going to happen to 18th of July. It's a long time away. So I think you're right that targeting split stocks at these levels becomes, a strategy in itself. Obviously, you've got to do your analysis. I'm not here to tell you what to do, but I can understand your concepts there. Jarok, thank you very much. $5. I have an employer, Nike, granted stock options that expired EOD next Friday. Okay. Ugh, I know. When would you exercise your NKE options over the next 2 weeks? That's a random question. When would I exercise NKE or Nike options. I mean, well, I can't really tell you what I would do. Obviously, that wouldn't be so good. But next Friday, do you get? I don't know what's your strike on these granted stock options that they expire. I don't know where you get to if you're talking about exercising them into price. I mean, you've got to look at your charts and you got to say, well, where am I? And the reality is you're back at pre-pandemic highs. Okay. How much lower can go? Can go further. But obviously, where are you? You're back at pre-pandemic highs. So you've taken off everything that it gained. So all of this gain is gone. That is a 68% gain is gone. So from a decline top to bottom here, you're talking about 41.5% down. I mean, that's a brutalization. I didn't even realize Nike was down that much. So it's around the area that some people would dabble. That's really all I can say. Tesla split going to make it tank. Tesla is... There you go. HB has something to say. He says, half now and half early next week, spreading the risk. Chris Hughes says, smart money now coming in with the major company buybacks. There are some major gains on the way, I feel. Well, certainly potential here. It doesn't mean you're out of the woodwork of the crash or any kind of badness, but you are approaching, remember, negative 20% on the SPY. That's technically bear market. Negative 30% on the Nasdaq plus. In fact, how much did the Nasdaq even go down top to bottom? I haven't even measured it. Let me measure this with you guys now. So it hit this price 31.5%. Whew, that's bad. Not unheard of, but certainly pretty damn bad. That's pretty bad. It kind of almost deserves its relief rally here. What was that other question I had here? Matthew Way brings up a good point. Get out now before those awful earnings. Yeah, earnings are pretty nasty. Was Nike not earned? Is there no earnings on Nike yet? Oh, 30th of June. Okay. Got no idea what that earnings is going to be like. So let's look at Tesla. A lot of people asking about it. We're about 24 minutes away from open. Thank you very much to the 1,212 people joining us. Appreciate it, guys. We've gone through the US 500 so far, the Nasdaq, some leads. Obviously talked about the US dollar as well. VIX very high here today, still 29.22 coming into the market. So fear still around. Now, I want to talk Tesla, and I'm going to ask the chat this. Is Tesla going to hold up, guys? I know there's a lot of Tesla bulls out there. We're not here to fight, but I want to know, what's your opinion? Yes or no? Is Tesla going to redeem itself and come back? Then I'll give you my opinion on things. And I, by the way, own a Tesla. So, you know, maybe I should love it more than most people, yeah? All right. When I look at this Tesla chart, while the comments are coming in, I've got to say I don't like what I see. And it's unlike other times, okay? Different to other times. Why is it that Tesla has euphorically moved, dumped, euphorically moved, dumped, euphorically moved, dumped, euphorically moved, huge, by the way, and then got obliterated? Kathy Wood, possibly the most biggest lover of Tesla in the normal kind of world of investors and stuff out there. She even started buying GM or something recently, yeah? Look, when I see this type of chart, I don't even know what to make of that, other than, to me, it looks like someone's dumping positions. I know that it's ramping, and I know this company is much more than others, but I'll say one thing. Tesla has held up incredibly well because it's hit every single target or done better. What if it misses? That's the question I want to ask. What if it misses? Because this stock has just done it every time. This is going to be a monumental day, I think. Will it miss? And more importantly, are the competitors coming close? Because I've been in one of the competitor cars. It's not as good, in my opinion, but it's getting there. It's getting there in some ways. Kathy was shorting GM, was she? I thought she loved GM. Elon dumped over the last couple of months. Well, that's also another thing. You know, Elon says a lot of stuff, but he tends to, you know, if you look at some of the things he's done, I don't like Twitter. Oh, by the way, guys, I bought Twitter. You know, he kind of says one thing and then he'll get you on the other side. Oh, I had to sell some stock. Sorry about that, guys. But I've done selling now. But my brother isn't. You know, that kind of thing. So you've got to be a little bit careful here about what someone says. I mean, I'm not doubting that Elon's a beast and he's done amazing things, but that chart disturbs me. And that's what I think is worrying here. And I've said it a little bit recently that when you get these euphoric rallies and these kind of big moves, it often can be the end of trends. And this has been on a big epic run for a while. So I caution people here. It's one of the only stocks that just has held like a beast. Right now in this market, it's in nowhere land. Could it rally? Absolutely. Is the rallies getting worse? Yes, the rallies are getting worse each time. When other stocks are rallying, Tesla's kind of lackluster. I'm not sure if it needs to go down here to 550 first or even to 600. But yeah, unfortunately, it's pretty tough here. Tesla is oversold bounce play today, says BCF. Too much politics. Don't know what that means. It is oversold. There is big volume on that trade. Probably worthwhile loading your Bollinger on there as well, just so you can see how oversold it is. You can see it's outside the extreme here on the daily, similar to the other markets. And it will come up with the Nasdaq. I'm sure it will. But yeah, for me to really say, okay, cool, I like the technicals on Tesla, I would like it to do this. At least snap that off. Start making, instead of making a series of lower highs, remember that whole time this was doing this, the stock market was actually generalized going up and it started weakening. I would like it to snap that. And then at that point like this. Jabasoli says, Tom, could you have a look at GME today? That probably doesn't help, Divisio. I appreciate it, Saboscus. Great videos, bro. Been watching for years. Wow. Cool. OG. Well, we're getting close to 100, you know. I gotta announce something in the future. I think I'll do a little giveaway for 100. You guys have been smashing the subscribe button. We're almost at 90, I think. Geez, we're 4 off 90. Guys, do it for me. Someone out there, click it. You can always unclick it later, yeah? Get us to 90. Come on. That would be awesome. That was my dream to get to the 90, to get to the 100 one day. But 90 is damn well close, and I appreciate that very much. All right, let's go through some other stocks here. We've got just over, what is this, 17, 18 minutes to go. Robbie Edna says, will ASX fill the gaps? We'll check out that soon. Thank you very much. All right, let's move through some other stocks. Let's go to others. We've done the US 500 and 100, but we will come back to it. Let's have a look at IWM here. We'll do a little bit of crypto as well, and then we'll get into the two major indices as getting into the market. So IWM still holding pretty damn strong. You can see here 1.23 up this morning. That's better than both other markets. The smallest cap stocks kind of already bottomed a little while ago. And this is actually testament to what happened previously. Remember, what bottomed first? January, we saw the low. That is, it got busted down into the 28th of Jan. We saw weakness in the small caps. The small cap showed weakness on the 24th and then rallied. Then they weakened. The small caps often lead. And the small cap seems to have bottomed here about a week ago, when we spoke about this exact level being the 2020 and 2018 highs. So the small caps lead sometimes in their horror show, the horror show of down, and also the big turnaround. So at this stage, it looks like this may have bottomed IWM. So Russell is looking a bit better. Nice little movement. Again, if you're looking at this from a top market, I'm looking for it to go through that high there. So it's actually going to open at 178.24. I would like it above 179.36 to show that it meant about this bottom and it's kind of ready to try to rip here a little bit, hopefully getting back to that 189 in the future. But small caps doing better than you expect at the moment. Thank you very much, Johnny Rocks. And everybody else. Let's see if we got it, guys. I'm pretty sure we did. Yeah, thank you very much. The 8 people that subbed. 90,004. Thank you. Wow. That's a big 24 hours for us. Okay, we'll do the ASX in a sec. But just remember that, yes, this IWM is certainly showing the goods. Go to the weekly. Long leg doji. Obviously a rejection. Bit of demand down here. Went outside the Bollinger, similar to last time. Could we see that relief rally? Something like this. Remember, it was doing its own thing while the rest of the market was making new highs and doing all sorts of things. This was doing its own thing. So IWM is worthwhile having on your charts if you don't have it there. All right, let's look at the XJO here quickly because we've been requested it. XJO is the Australian market. By the way, look at that market. Wouldn't you rather, for the first time in a long time, you'd almost rather be Australian and investing in the Australian market? Yes, it didn't have the superior gains. Yes, it's just back to where it was in the 2020. But I'll tell you what, it's been more stable recently. I think with the ASX, it's pretty clear to me we hit the level of demand. It's holding up as best it can, and I need it to breach. Similar, it's waiting for the US market to give it direction. 20 moving average here on the daily. You can see it there. I want to see it close through 7,200 to begin a rally that allows us to go back to like a 73 plus. So at this stage, that's my thought process on the ASX. I want that to be breached, and I think the US market is the one that's going to take it there. Very similar, very similar. That's why we don't cover it too much. 7,200 big zone. It's a fight. And then, of course, down here, 69.50. All right, 14 minutes. Let's go over here to the pre-market, check out what stocks are moving, see whether it's any particular thing. We'll go market cap here of 20 billion plus, 24 bill. And we'll go EPS anywhere. Oh, wow. We can go a lot more down. That's just how many stocks lost value. There we go. So pre-market, what have we got? Motorola Solutions. Some interesting stocks here. Pre-market on the now. Oh, downside. Autodesk doing bad. ADSK. Tesla down 1.19. So uncharacteristically weak here in the first start of the session. Snowflake down as well. So again, positives. A biotech stock. This BioNTech seems to love its pre-market and then doesn't hold up very well. American Tower Corp. So some different sectors here. American Express. Few banks up, Goldman Sachs, a couple of banks here, Nucor finding some strength, Microsoft, big tech. So a mixture of sectors. The hideous EA. Wow. EA is holding a 130.76. Pretty strong. Tom, can you have a look at SE? Yeah, I can have a look at SE. For anyone that doesn't know, SE, one of the biggest Southeast Asia, I think it is, shopping companies, big in Singapore, big in Philippines, Malaysia, I think those countries. So it burns cash out of control. Now, where are we? Well, we fell all the way to 55.50. So really far down. And it seems to have rallied, at least off its lows. You'll see I put this resistance here around that 90. The reason I say that is because it's a huge rally. This is not just a small percentage. That's already 46% in only a few days. That's just how much is in these hyper stocks when they take off. But I could see some problems in this area, which is why there's 2 long leg dojis. And once it busts that high, which is 83, the next zone is about 90. So from 83 to 90, I think is fair game on something like SE. And Robbie says $2.99. Sorry, Tom. Gaps on CFDs 69.25, 69.55, and 70.55. Oh, I don't know about the gaps on the ASX. I don't think you need to clean them. It's going to be more the S&P 500, Robbie, that will lead us that way. So unfortunately, those gaps, I wouldn't pay too much attention to the CFD gaps. So this I like these dojis. I want it above. And as it goes above, hopefully we move towards that 90. That would be that zone that I think people will be looking for the buys. At least the earnings was out. That's done. That's good. AMD getting a lot of requests here in the room. We're just on 11 minutes into the open. So we'll focus in on some markets and S&P 500 and Nasdaq very, very soon. Here's the AMD. Broke through that 102 and dumped off. It found some strong buy demand here. The question is, was this a fake double bottom? Well, I think it's a great question to ask. And when you're thinking about setups in the market, we'll get rid of the Bollinger here for a second. And we'll get rid of this 20 just to not confuse anybody. When you're thinking about a breach, you actually have to expect that a breach of a double bottom will pull back a lot of the time. And a lot of people don't understand why. Well, because it's been in a very aggressive downward trend. And at this point, you actually end the downward trend on the first time frame. So you're basically saying, okay, we're in a downward trend. We've got peaks here. We've smashed those peaks and we pull back. Hopefully after that, you create a spring, which is possibly what this whole Friday thing was about, creating this spring. So if you think it's a spring and you go into something like a 1 hour, this looks like a potential accumulation. So if that starts going up, which I guess you suspect it will, and you make a new peak here, it's kind of done the right thing. Increased volume, check. What's that telling you? Potential accumulation. So I'm not concerned about that pull up, that pull back. That actually makes perfect sense to me. The one question you've got then, though, is can we make a new little peak off this to really signify that this whole bottoming that was through this spring is ready to rock? And if it is, then of course, the next move for AMD would be ideally into around that 122. Not my favorite stock in the world, but yeah, I can see why it fought this area. I would like it above that daily close or that daily high. Do the VIX, please. Okay, we'll check out VIX. AMD just had good news. Yep. So here's the earnings result. AMD is a good company. I don't like it at these prices, but that's an opinion. That's not based on TA. So here we've got the VIX 29.13. It's kind of high. Obviously, not too much analysis you really need to do here. I like to target those kind of 35s. I've spoken a lot about that. The low here, forcing its way through around 25. So that's a pretty big area for the VIX to dump off on. 2 rejection wicks. I think a breach of that level would mean significant failure of our concept here that this could be a bottoming of the market. Because at that stage, if the VIX is rising above here, not so good. That would be very bad. But I would say already the US market will be failing hard at that point. So VIX, I would suspect, comes back down to 25. But only if the stock market does what we're about to talk about again. So let's go over to the US 500. Again, key levels watching this week. We'll use ES minis. I know a lot of you in the US use this. Oops. There we go. So we have here a resistance that was formed through the last 2 days. Look at the SPY or the SPX code to see that. I'd like to see that get taken out. That is this high of around 39.50-ish. If we get that in the real market taken out, that's a good sign. you could still expect pullbacks. Where is buyer demand going to come back in? You would think there's going to be buyer demand pretty strongly through that 38.80 to 38.60. Just in case it comes down, I still think there's buyers somewhere around here at this stage. Consider it like this, and this is possible, and then hopefully rally. The other opportunity is something like this, small pullback somewhere into the day. So let's have a look at the smaller time frames. Let's go to 15 minutes, see if there's any zones that we see being defended. You have a gap that's in here now. So from here to here is a gap that's going to open on the real market. So what if it did this? Clean the gap, 3,900, key zone. You know that's where it closed, rally. We need it to make a new high. Ideally, it makes a new high and then comes down. The new high signifies a change of first directional trend. My sound's not good. Anyone else having the problem with sound? Just quickly, I can always reset it if needed. Can everyone else hear us? Rising wedges all over the place. Yeah, rising wedges are a dangerous TA pattern. Often drawn incorrectly and very hard to back test correctly. Sounds good? Okay, thanks very much. So right around there, big key zone. Let's look at the expiration here for the 23rd. Options expiration. Not too much to really write home about in terms of what we're seeing here. Lot at 420. Well, they're all going to lose. Nothing much there. Little bit sitting at 380. So not too much options going on here. 25th, 400. Little bit of calls there, more than the puts, and still 380. A lot of puts, well, few puts floating around there. Not huge orders. Then we come to the Friday expiration. Technically at this stage, max pain 400. Don't pay too much attention to that though. It will shift. So 385, 390 puts, and also 400 outstrip puts to calls at this stage. So again, Wall Street would prefer, theoretically at this point, to be above 400. And somewhere, I think, between 400 and 420 would be the preference of the street at this stage to make maximum cash monies. We'll go back over to ES futures. So we've got that resistance that we'd like to see busted. We've got a gap in here. So, and we've got this big previous demand zone that kind of fought with it a little bit. I don't like this area too much, but I could see that being a zone. So I like that 3,900. I think it's a big key pivotal. That's where the gap kind of closes. And I think there will be some form of buyer try to step in at this point based on what we saw on Friday and those types of things. So if we reach down and we move down, what are you looking for here? Little changes of trend on the smaller time frames. Ideally, it does something like this. Breaches. Bang. So remember, boxing up your zones, guys, super important. Creating demand supply areas, understanding that this is a pivotal area of resistance, understanding there seems to be nothing on this left-hand side. So if it does get allowed to go out and the market starts ramping, there could be some serious moves, potentially, not stopping until zones such as 40-30, 40-40, or even 40-80. And there's a lot of free inefficiency that happened over here. Here we go, 3 minutes till open. So we'll load this one. We'll put that on the side. We'll bring up, I guess you guys would probably like the US 100 brought up as well. So we'll use that. That is the Nasdaq. I don't know what's going up there with all those lines. It's coming from other chart, I think. So here it is. And coming into today, it looks like the S&P 500, that is, diversification seems to be beating risk. Because risk in the big techs must be struggling still. Look at that trifecta of wicks. Not ideal. On the futures, long leg doji, current weakness. What do you need to see as a bull? I really want a closure above here. I mean, you just really do. So it's a massive level here as well for it. Clearly a big zone around that 12,100, 12,080, 12,100. Hey, Tom, can you take a chance at the ES1 chart? I'll link to you. Okay. Oh, okay. You're drawing it up as like a Wyckoff kind of change. Yeah. So basically, just a member of the community has drawn up one of these. I'll show you guys just leading in. We've got 1 minute here before we go back to it. Basically, he's just saying that there could be this idea of maybe another big rally followed by his predicting a pullback to allow all of this movement to play out. So there's that low that sweeps later on in the year after maybe the summer. And then we get that move. That's consistent with seasonals. Remember, rally here would be consistent. Just quickly showing you the seasonal. There's the seasonals that played out are the midterms. May was the deciding factor, and it rallied into September. So I know we're open. Let's just quickly switch over here to the ES minis and see how the market's reacting. So we open up here 0.73, 0.75 on the US 500 versus only 0.35 on the US 100. Nasdaq really weak here. Square not doing so great, but down 0.5. Okay. I thought that showed 4 just then down. So, okay, the big tech stocks are kind of holding 0.47 for Apple. Hyper growth not doing so good. All these hyper stocks. I almost want to delete them off my list. I'm so disgusted in so many of them, but I know you guys like them there. Wow, T-Doc's $32. Wow. PLTR $8. It's almost unbelievable how low some of these got. And Shop was like 300 the other day or something. So yeah, it's a little bit weak there. Okay, here we go. A little bit of growth. Let's go to the 5-minute chart here. Go 1 minute. So lackluster initial movements. Small sweep underneath that low there on the NAS. Not much to write home yet about that. Gap technically will have closed for that high for the NAS. You are right, but last 7 weeks straight down. 10-cent Murphy says, AVAX is baiting me so hard. A lot of stocks do that. Ozmaster says, Tom, can you do some high time frame analytics? Some fib theories suggest we done with a 10-year bull trend. Yeah, but the problem is, Ozmaster, if I go into the future and start thinking, really large time frame stuff, it's not going to help most people. Most people love to live in the here and the now and the next week and the next day and the next 2 weeks. And they're not really interested in the next 6 to 12 months. And anyway, I don't think it's the time to possibly predict the end of the market completely for a 10-year bull trend. I generally see housing being one of the biggest downfalls of market economics. And that's the one that I'd be looking at the closest. So if ES closes the gap before making a new high, what are your thoughts? Well, I don't like it so much. I would prefer that ES made a new high. I guess it did in the futures. So you could say it did it in the futures, but I would have liked to see it do it in the real market. Look, regardless, I'm targeting. I would target and look around this gap closure on the US 500. I just think that it makes sense. You come into Monday, you freak everybody out. Okay, cool. Well, we're going back down. Sorry, guys. Goodbye. You come into a potential area, and if you see the right movement, again, something like this is a scenario. 1 second. That kind of scenario there, which is quite common, or a setup similar to that, yeah, you're looking at a real potential for this being the demand zone, this being the area that you're interested in picking up. I'm just giving you the scenarios, but I think regardless, 3,900 is a big area. You gap fill, and then you really see what this market's about. Is it ready to actually rally? Well, that's the area it should rally off if it's going to give it a shot. Obviously, you need to select your own zones, guys. 1,326 people joining us. Thank you so much. Nas about finished with the true gap. SPY holding up really well here. 0.6 with the Nas only 0.19, IWM 0.73, and the US 30. So the big stocks here holding their ground. 0.82 on the Dow. Again, weakness through hyper. Strength to a degree through the big stocks. Apple up 0.7, Amazon up 0.88, Microsoft 0.75. So big defensive giant things seem to be holding, and small little stocks struggling here today after a monumental recovery on Friday. A few people asked about GME. We can look at it, I guess, but it's not going to do much. Went with Costco, Tom, for the rebound, says Franklin. Okay. Store was packed yesterday. Well, yeah, Costco do very well, and Costco specifically usually are a good recessionary stock because that's why markets usually pump those kind of stocks, because people can't afford to go buy their Burberry bags. Well, Burberry's not cool anymore, is it? Their Chanel, their Hermes, their Rolex watch, and they go instead to Costco and they buy a hot dog and those deck chairs. Thank you very much, Michael. Appreciate it. Thanks to the community, not thanks to me, but I appreciate it. What's going on with corp bonds back at pandemic lows LQD? One thing you should look at, Tencent, just understand US 10-year. US 10-year puts a lot of pressure on LQD bonds. Remember, they're a mixture of bonds are susceptible to two things, risk and yield. Is it time to buy Plug Power? All those stocks terrify me. I don't really know them well enough. I like the S&P 500, the Nasdaq, the sectors, the top end stock. Dabbling in the weird stuff sometimes is cool, but I think you're probably starting to see they have their time in the sun, and then you got to get out because they always go bad. If you want to see some stories in the past, I'll give you some right now. 3D printer technology, 2012-13. Oh, I remember that one. That was fantastic. The future didn't work out. Weed, marijuana stocks, multiple times over the years didn't do so well. Hyper-growth stocks, 2020-21. Lithium stocks, 16-17. And then again, last year into this year. These things happen time and time again. Gap filled now on the NAS. So weakness here this morning, not unprecedented, not necessarily unexpected. Surprised that their SPY is not even showing that much weakness while the NAS is tanking. So if we bring up the rotation here that's occurring this morning, which I can do right now, let's do it together. Let's see where they're all sitting. So best stock sector of the day. Remember we said before financials was doing well? Well, it's the second best. Look at that. So we've got here XME 2.45%, XLF 1.93%, and then XLB 1.15%, gold 1.12%. So worst sectors are TAN and the hypers, and the reason, I guess, is because they ran too far ahead recently. 9.8 and 6.41. So other things playing catch up a little bit here. But yeah, best sectors today are metals and financials in the morning. Where do I get that sector data? It's coming from Coifin. Obviously, it's a I'm not associated with them. I just think it's cool to be able to see that. Chamdy says, I've been adding Google to my position on every dip, looking for that next rip and up, and then I'll shave some off. What do you think? Oh, well, I think it's pretty good stock. Obviously, you're approaching a dollar cost averaging style on a stock with a split coming up. So that there are benefits there. I mean, we're on YouTube right now. Technically, we're giving them a few coins, yeah. So you're benefiting them here right now, and everybody else here is. So yeah, look, I think Google's a pretty good stock. I like Google a lot. Of the two stocks that I like, it's Microsoft, Google, Microsoft, Google, Microsoft, Google, and Google, Microsoft. Every other stock, not too much. John Turner loading up some lithium, Pilbara Resources and Liontown last year. Wow. Yeah. They go off and then they go really, really bad. Time to buy GLD. I like gold a lot at the moment. As I've mentioned, I bought it up quite a few times on the main channel for the videos. And that's because, yeah, I see gold being overly sold by the market. And yeah, so it's pretty lackluster here this morning. I know there's a little bit of move, and this is 0.6%, but in general, we're about to make a new low here on the 1 minute futures for the S&P 500. We've filled the gap on the NAS. I think it really comes down to 3,900 is a big key area, possibly even this zone, but I could see it kind of, I know it came down here. I don't even know why it really stopped right there, 39.13. I don't even know if I trust that as a low. I could see it spike, and I'm ideally seeing it sweep that and then move through. So this is a pretty big area, this gap kind of fill zone. And I would think the market wants to do that. Based on today's price action, do you think there'll be a bullish rip? Yep. It doesn't make any difference to me. I mean, I still think there's a bullish rip coming. I think it was all the Friday style move, especially that last manipulation into the close, to me shows the market was in full trying to max pain manipulate to get their perfect options expiration so they can make lots of money. There's a bit of a rip coming in here right now. More people hit the like button if we get Tom ranting on IPOs or SPCE. I'll just say this about IPOs. Don't get into them unless you are early investor. Facebook, Twitter, Hood, SPC, it doesn't matter. Just go look at all the IPOs. They're all horror shows for the first 12 to 18 months. Horror shows. Coin. Just disgusting. And SPACs are disgusting, unfortunately. But unfortunately, you all know that by now because I said they were disgusting in 2021. Anyone that's OG that's been here, I said they were horror back then. They're horror now. If you're trying to get a company on the market and you're not prepared to go through the normal thing, probably a questionable kind of asset. So big rotation going back into the tech. Seems like Apple's the beneficiary most of this, of the big stocks. It's cool, I guess. Look at that. Look at that. That's a massive shift there when you think about it. The amount of millions and billions that just shifted because you shifted to tech while still dumping the S&P. So that means that all of those rotations we just saw early will have shifted. Still financials holding up. Metals, XME now only 0.81 and XLK now 0.89. Look at that ramp that it just did. Valdo Rin says, IPO a horror show. Wish I bought Zim at IPO. How many IPOs do well? DXY is done, hopefully. I'd like to see DXY moving right back down so we can get some assets, get some cash into these assets, guys, pull them back up. There was one thing I was going to do here just to finish up, but I can't remember what it was. I got distracted by IPOs and horror things. Romeo's been relentless. Why do people want this WPM so much? Wheaton Precious Metals Corp. Oh, I get it now. Actually, is there any reason why everyone wants this so much? Can't hate on it too, I guess. Did a recent breach of a downward trend, had a nice little rally. That's cool. Came back down, retested the demand, and it's trying to rally up. I don't really think it's too bad. Earnings is over at least. Let's go to the small time frames, 1 hour. Yeah, a little bit of a problem here. Look, overall, I mean, it's at the right area. You've got your lightning bolt. You're generally kind of making series of highs. Looks okay. Can we have a look at Square? Not much to say about with Square, similar to the others. Trying its best. Key level here for Square, $90. Yeah, I still have a little bit of this horror show from up in here. I have a little bit still. I got stopped on it here because obviously you know what I was trying to do with it. But yeah, I've got to get some options expiration. Very small amount. Just put in a third, but yeah, I don't think it's coming through. That's Gonski. This is why you don't look at these little stocks, these smaller ones. You focus on the big ones. The big ones give you money and give you more accuracy. Is the VIX telling us anything? Not really. I mean, obviously a little bit of increased fear here due to that morning shuffle. But I'd expect that to drop if the markets consolidate. Big shift to tech all of a sudden just happened during the stream. I mean, literally, 5 minutes ago, we saw tech starting to fire. And then all of a sudden now tech's about to outpace percentage gain here. There it is, just took over the S&P 500 there. Still no break above the big zone, 39.50. Nice little pick so far. It's a good sign if it closes up like that. You know, obviously then if you get a nice little spring potentially here at 39.20 from the other day, that was a maybe that's all it needs. But I want to see it through 39.50. I really want to see it through 39.50. Shop, please. All these hyper stocks are very, very similar. They've all got kind of high levels that they struggled with the other day. Shop is 408. You can see it's back on the support line at this stage. It's been incredibly sick. It's back on demand at this stage. Shop is, and the other one was Airbnb. I don't hate Airbnb. Daily is quite sick though. It's another IPO that's kind of slowed itself. There was about 18 months later, 12 months later, we got that rally, and then now we're at these lows. For me, it's got to bust this. I don't really care about it in here. It's very tough to say this is the low for it. You don't know that. If the rest of the market bottoms, then sure, but I think this is the critical zone here around 123. Looks, thank you so much, guys, for following today. We hope you did enjoy. It looks like the markets are going for it. I hope they do. This is 7 weeks, statistically unlikely. I'm way more bullish off the bottom here than most people probably are. But that's just, my statistics playing out and my knowledge of so many systems that seem to be at around the right area. Could we be wrong? Of course, you always can be. But these areas and the way that Friday reacted and stuff, I wasn't kidding when I look at that and I go, this is very sneaky. It hit the 38.2 fib. It hit a technical bear market. Didn't close underneath. 7 weeks in a row down. I'm hoping we can get a nice bull bust today of 39.50, and ideally it kind of looks like this. Maybe something like that. Pull up to 40.80 would be sweet. and then we fight another day round here between the bulls and the bears. I would expect some war zone, though, if it does get up there. All right. Thank you so much, guys. Corey Molnar says more upside than downside at this point. Pretty equal. I think that most big bond traders I talk to, the ones that manage a few billion, those guys mostly think around here actually is they want to see everything shaved off the market, and they're targeting these zones later on this year. I'm not kidding. That's actually what they think, some of them. Now, if you consider that, that's about 31%. We're sitting at 21. So they're saying another 10 potential here of wipe off. Well, is that bad? You've already weathered a lot of it. So I get what you're saying there. Thanks so much, guys. Thank you for getting us to 90K. Really appreciate it. We'll come back tomorrow with another video, or later on today with another video after the close. Let's see what this market can do. Can we get through 39.50 and pull in a really nice bull move? I hope so. Good luck, everybody. Best wishes, and we'll see you in the next one. And congrats to anyone that got that gold the other day. Well done. Bye for now. Oh, Robbie says here, why are you so bullish? You generally follow the trend. Please answer, please. Have a look, Robbie, at what we talked about. The wave down, the 20%, the current demands. I do follow trend. I know what you're saying. But I also know that this is an unusual spot with unusually high fear. Yes, I do follow trend. Why do you think I'm wanting that to bust so bad? Okay. I want that to bust because it knocks the trend into suddenly 1 hour trend becomes bullish. And pullbacks will be met by more buyer demand based on my knowledge of markets. But that doesn't change the fact that this is all smelling of dirty Wall Street trapping around here. It's very specific time. 5 waves down, overdue, 7 weeks down in markets, 20%. Very strange. All right, catch you for now. Bye.